After several years of record-setting traffic, it appears Colorado's tourism economy has hit a plateau. Some communities are even reporting declines in visitor traffic and spending, marking the first slowdown since the pandemic. Last year, Colorado hosted 95.4 million visitors who spent $28.4 billion. That's up 2.1 million visitors from the crowd that spent $28.3 billion in 2023. Most of that increase in visits last year were from Front Range day trippers exploring Colorado, with no growth in overnight visitors in 2024. That's the first slowdown in overnight visitors for Colorado's statewide tourism economy since 2014, excluding the pandemic-triggered global collapse in travel. For more than a decade, visitation and tourist spending have set records every year. That record-setting trend appears poised to end in 2025. Hotel occupancy across the state is down 2% through June. Hotel revenue is also down. The first quarter of 2025 has seen a 10% annual dip in short-term rental home bookings. Ski season visitor counts reached 13.8 million last season, a decline from the previous 3 seasons, but still above the long-term average for Colorado resorts. Since 2019, Colorado's share of the country's vacationers has slipped, which, along with a precipitous drop in international travelers, poses challenges for the state's businesses and communities that rely on visitors. Colorado Tourism Office launched a $1.4 million winter ad campaign for the 2023-24 season that drew visitors who spent $1.44 billion. That was the largest return on investment ever for any state winter tourism ad campaign. 2024-25 ski season collections dipped for the first time in many years. The 18 towns saw $5 billion in spending. That is resident and tourist spending from November 2024 through April 2025. That is a mere $2 million less in net taxable sales from the 23-24 season, but it's a 48% increase from the spending in the pre-pandemic 2018-19 ski season. A consistent and growing decline in international visitors is leading the slowdown in visitation to mountain towns. Bookings by Canadian travelers are down 58% compared with 2024. Bookings from European visitors are down 39%, and reservations from the Aussies and Kiwis are down 21%. The number of international tourists visiting Colorado has not returned to the pre-pandemic levels in 2019. The Trump administration's tariff policies and chatter about annexing Canada have irked a growing number of America's northern and southern neighbors. International travelers stay on average for 8 days when they vacation in Colorado, and they spend 3 to 5 times more per person than domestic travelers. Those international travelers can boost local economies with fewer people in town. Combine the dip in international vacationers with growing reticence among US travelers, and the booking pace for the summer across Western resorts is down more than 7%. Launch keepers are trying to offset the dip in numbers by raising room rates, which are up about 4% compared with 2024, but that can be a tricky game. Raise prices too much and communities can pretty much eliminate an entire segment of visitors. Owners of affordable lodging properties have struggled in the last year as demand ebbs and prices climb, but higher-priced mountain town hotels and lodges have seen solid growth in recent years. Some communities could begin cutting budgets as visitor spending and tourism tax revenue drops. The slowdown in visitor traffic has yet to push many communities to reverse course on recent imposed short-term rental regulations like caps on the number of rentals in a year or increased licensing fees. The quality over quantity focus in mountain town tourism marketing has been a growing trend as communities grapple with increasing crowds. But as traffic wanes, that approach of managing tourism versus marketing to tourists is starting to shift, especially as competition ramps up in the fight for travelers.